AI continues to be a theme this year, and our next guest has 3 plays in the tech sector, to share with us that could be driven by AI. Joining me is Mike Clare, Senior Vice President and Senior Portfolio Manager at Brompton Funds. He is here in studio, as you see. Hello, sir.
Hello, how are you?
Very well. Nice to see you, Mike. Thanks for coming in. Let's start right off the hop here with the Broadcom, number 2 in AI chips to NVIDIA. And you believe that they're going to benefit from the next wave in AI capital expenditures. What is that next wave?
Yeah, so I mean, what we've seen to date over the last couple of years is a lot of spending by the hyperscalers in terms of building out these big, large language models. So lots of spending on NVIDIA's GPUs, which are really good at that brute force computing to build and train those models. But we think one of the key trends we'll see for this year and the next wave is more custom chips. And so Broadcom is really well exposed there. They make these, they're called ASICs, they're application-specific chips. And why that matters is these are chips that are higher efficiency, lower latency, lower power demands. When we hear all like the need for power, these are really gonna help drive sort of more efficient use cases for AI, so anything from autonomous vehicles or things like that. And we think Broadcom is well positioned as the number 1 player in that space. They are, management came out on their quarterly call in December and talked about sort of a 60 to 90 billion addressable market in terms of these custom chips for by 2027. We expect they'll take a large share of that. And so as they're, selling and working with these large hyperscalers, we expect their revenues to grow. So their AI chip segment is growing at a 50% rate.
We're looking at the stock here. Markets closed, of course, today in the U.S., but sitting at 229. It really exploded after those earnings. So are you saying you can probably buy it here? It's okay?
Yeah, I still think it's good to buy here. It trades at a discount to NVIDIA. So that works well. We also like other aspects of the business. They're really big in AI networking. Like the history of the company is really in networking. And so as you build out these data centers and you need to network everything together, they've got a lot of exposure there. They've also got a large software business as well, infrastructure software, that makes up roughly 40% of their revenue. So that provides, stable cash flows to support the business, high margins. And so really we like the broad business mix and the growth potential for Broadcom.
Right, so they have some diversification there. Let's move along to Alphabet. Yeah. You see 3 main opportunities here. AI, not surprisingly, cloud, and Waymo as well, autonomous vehicles.
Right, so one of the things we really like about Alphabet or Google is where it trades. Like it trades at a discount to its peers. It trades at roughly 21 times earnings, which is approximately in line with the market, a discount to the mega cap peers. And one of the reasons for that is we think there have been some concerns in the market over, competition for their search business. So they have a high 90s market share in search with Google. We've seen obviously competition from some of these upstart AI players like ChatGPT, Perplexity, and others, and that's weighed on the stock. But really, we think, Google Alphabet is well positioned to maintain that lead in search. Partly because of name recognition. So one of the things we see is with some of the other traditional search engines, often the largest search is for Google. People want to get to Google.
Right.
But also distribution. So they've got 2 billion plus users across some of their key applications, whether it be search or Gmail, YouTube. And so being able to distribute new AI products through that platform, we think they have an unmatched ability to do that. And ultimately, I think you're not going to go to Google Gemini, which is their AI version, their Gen AI model. You're just going to go to Google. You're going to search, and it's going to provide you whether an AI solution or a traditional search. So
okay, and then your other hot pick is Salesforce. There are a lot of people saying it's showing to be difficult to get profits out of AI, but you think there's return on investment from Salesforce, correct? And what are they doing right?
So one of the key themes we're seeing is there's always been this question about, hundreds of billions of dollars of spending on capital for AI. Where are the returns? And we think one of the key areas for returns this year is as we start to see these applications come out. And so Salesforce has come out with a product they launched last year called Agentforce, which is essentially digital labor. It's being able to use an AI agent, sometimes referred to as agentic computing or agentic AI. And one of the key use cases, at least as it applies to Salesforce, is for customer service. And so there
chatbots? Or,
chatbots, but it's more, verbal. So you could call, customer support for some product you have, and you'll be speaking to someone, but it won't actually be a real person, right? And so there are, upwards of 3 million customer service agents in the US. And so even if you can replace 20% of the call volume, you're looking at a pretty sizable market. And we expect Salesforce to be the #1 player in that market.
All right, very interesting. So once again, Broadcom, Alphabet, and Salesforce.